IBM stock is having its worst day ever after the surprise release of an. The consensus read is already outdated. What matters now is the second-order effect most commentary still ignores. We will map trigger, incentive shift, and downstream impact before the close. And the reason isn't what you think it is. On the surface, the earnings miss looks simple: expectations didn't match reality, stock fell, investors panicked. That's the narrative everyone's running with. But that's not what actually matters here. What matters is this: IBM's collapse reveals a fundamental shift in how technology investors value legacy hardware and software companies in an AI-first market. The miss wasn't just about quarterly numbers. It was about the market realizing that IBM's business model, selling enterprise IT infrastructure and services, is under existential pressure from AI commoditization and cloud consolidation. Here's the real story. For decades, IBM survived by being the indispensable middleman. Enterprises needed servers, databases, middleware, and expensive consulting to make their systems work. IBM owned that layer. Revenue was predictable. Margins were fat. Growth was slow but steady. That model is collapsing. And not because IBM is executing poorly on AI. It's collapsing because enterprises are realizing they don't need the middleman anymore. Public cloud providers AWS, Azure, Google Cloud are bundling infrastructure, software, and now AI capabilities into platforms enterprises can consume directly. The consulting? Generative AI can do a chunk of it. The middleware? Cloud platforms abstract that away. IBM's earnings misses the market finally pricing in what's been true for 2 years. IBM's legacy business is in structural decline, and their AI pivot hasn't offset that decline yet. The stock didn't crash because of one bad quarter. It crashed because investors realized the next 10 quarters are going to look similar unless something fundamental changes. Now here's where this gets interesting for you. This isn't just an IBM story. This is a pattern. Any tech company whose revenue comes primarily from selling services, infrastructure, or proprietary platforms that cloud providers can replicate is facing the same pressure. Oracle. Salesforce to some degree. Even traditional management consultancies. Their moat, the exclusive relationship with enterprises, is eroding. For Indian tech companies specifically, this matters differently. India's IT services sector, TCS, Infosys, Wipro, has built a similar model: sell implementation services, consulting, and custom development at scale. That model works when enterprises need armies of engineers to build bespoke systems. It breaks when enterprises can build faster and cheaper with cloud platforms and AI-augmented small teams. The earnings miss at IBM is a preview of pressure that's coming to Indian IT services in 2025 and beyond. But here's the contrarian part: this isn't a disaster for everyone. Companies that can pivot from selling services to selling products built on AI, or who can move upstream into AI-powered workflows and automation, can actually grow faster and capture more value. IBM's problem isn't that they don't have AI tech. Their problem is that their sales motion, their customer relationships, and their cost structure are all built around a model that's becoming obsolete. So what changes next? Watch for 3 things over the next 30 days. First, guidance. If IBM's next earnings call includes downward revenue guidance for 2025, that's the market's signal that the structural problem is worse than one-quarter volatility. Second, leadership. If IBM's CEO and board don't articulate a credible pivot strategy, expect institutional investors to start exiting. Third, the domino effect. Watch earnings from Oracle, Salesforce, and SAP. If they guide down on enterprise IT spending or service revenue, you'll know this isn't IBM specific. It's a sector repricing. For creators and entrepreneurs, the signal is clear: the margin compression in traditional IT services is real and accelerating. If your business model depends on selling time, implementation hours, or proprietary infrastructure, you need a product or AI-enabled leverage play, not just services. That's not hype. That's IBM's stock price telling you the market believes that already. The final piece: this matters to retail investors and employees too. If you own IBM stock, the question isn't whether the stock bounces short-term. It's whether the company can genuinely transition before the business erodes further. If you work in IT services or enterprise software, this is your 12-month runway to develop AI capabilities or move into product. The market is repricing this sector now. By next year, the salary and job market will follow. This is what to watch. Subscribe for daily intelligence on markets, technology, and the second-order effects of moves like this one. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next.